Hi everybody, this is Todd with the daily video. Hope you're having a great day today and are ready for the weekend. Hard to believe we're at the end of another week. Markets seem to fly by day. And as you all know, we've got continued volatility that occurs in the market right now with the issues over in Europe, financial instability, debt issues, all that stuff is throwing a kink into the sometimes deliberacy of how the markets move. And as you know, we want to have markets that are moving deliberately. And if we can do that, then we're going to be, at least if we can understand that, we can take into consideration those things that might cause our trading to be a little less consistent. Those things are having a good risk management system in place so that we're taking advantage of keeping our risk low and not allowing the markets to really dictate how much we're playing with in the market. Now, this morning we've had a couple of reports come out. In particular, the GDP, advanced GDP for the U.S. came in right as the forecast of 1.5%. So even though it's probably not as terrific as what we'd like to see, it is what it is. It came in right where it's supposed to. Now, as we start to look in towards the weekend here, anytime we have open positions, we want to be careful with what we're doing, whether or not we're going to hold that position over the weekend, because the weekends lately have become an area where the markets will tend to be will move quickly, either for us or against us. And what we want to do is we want to avoid those things that are going to cause problems to our account. And if we can avoid being in a position over the weekend, then we may want to decide to get out of those if we can. Now, it doesn't mean that we have to. And if we're in longer term positions, we may not do that. But if we're in short term trades, a lot of people don't like to hold on to those over the weekend. All right, so a couple things I wanted to discuss today. And I've got this slide up here, and this is really what we're going to focus in on. And when we talk about the simple trading method, we're really talking about a way that we can look at the markets and the charts that will help us determine when we're going to enter into those trades. Now, things that you must learn in order to really maximize your success as a trader are listed here, and we're going to kind of talk just about these briefly. But we need to know who we are as a trader, and sometimes that can be difficult because we don't know who we are as a trader. We have to try to understand the tendencies that we have as a trader, from how well we manage our positions, how well we follow our rules, how well we do all those things that are necessary to be successful with trading. And if we're not following our rules or not taking our rules into consideration as we do trades, we got to figure out the reason why we're not doing that. Is it because we don't believe in the system? Is it because we haven't seen the consistency, or whatever it might be? We need to figure that out. We need to know what our money/risk management rules are. How much are we going to be risking in every trade? Is it 2%? Is it 1%? Is it 0.5%? And how do we calculate our position sizes? Do you know how to determine how much you're going to be trading with when you get a signal from the simple trading method? And if you don't know that, you need to figure it out. It's fairly simple. You just need to know how much your account size is and what percentage of that account you're risking, and then determine where your stop loss is, and figure out that if you got into a trade and it went to the stop loss, are you going to be less than that 1 or 2% that you planned on risking? And if you are, then you're right where you need to be. All right, so now the next thing is our entry signals, and hopefully by this point you have a pretty good idea of what those entry rules are with the simple trading method. Exit rules: where do we place our stops? Where do we place our targets? And you want to make sure that you understand that that is a key part of being successful with this. So you want to understand that. Understanding the market. Now this can be a little bit more difficult, but we have to have a general idea of how the markets are reacting. Are they volatile? Are they not volatile? And you can get a sense of that by just looking at the charts. You want to kind of understand, are there times during the day where it's more likely to be volatile or move? Are different instruments going to be affected differently? Stocks, options, futures, currencies, metals, whatever it might be, you need to understand how those work. And then you need to know when to stop trading. Do you have a goal for the day that you say when you reach that, you're going to stop and take a break and go do something else? Do you have a target for how much you might lose in order to say, I'm done for the day or the week? And so you've got to have an idea of knowing when to stop, because we can't trade all the time. Now, obviously, if the markets are closed, weekends or whatnot, we're not going to trade. But during the time that the markets are open, we may not want to be sitting in front of the computer the whole time. So when do you stop trading? So this weekend, take some time to kind of think about these things. Make sure you've got them written down so that you're comfortable with answering those topics of things that you must learn, and put it onto paper. Make sure that you're ready to go with it. And then practice trading, and do as much practice trading as you can. So with that, we'll wrap it up. Have a great weekend, everybody. We'll be back on Monday to take a look at how the week is going to open, see if anything on the weekend caused the markets to react funny, and see if we can find some trades. And so until then, have a great weekend, and we'll talk to you soon.